So the first number is your income number. So if you're employed, it's very straightforward. It's your whatever your contract says divided by 12. You take off the tax, you take off the national insurance, you take off any possible deductions. Actually, it's not that easy, but you get the idea. You go from gross pay to net pay. And the differences are things like, as I said, tax, national insurance, pension contribution, if you've got a student loan. There are a few things, but you need to know what goes in your bank account every single month, your take-home pay. What is that? And if it fluctuates, i.e. if it's not the same every single month, why is that? You need to know. The next thing when you're looking at that is that's for employed. If you're self-employed, you really need to know what you're earning. Take it from someone who is. Month on month can be so different, but you need to know what is your baseline. What can you manage? What can work for you? And this is why the second number is so important. And the second number is your expenses. Now, there are a couple of types of expenses. There are fixed expenses and there are variable expenses. Now, your fixed expenses are things like your standing orders, your direct debits, things that you have to pay every month. So if you have rent, that's one of the figures. If you have a mortgage, that's one of your figures. If you pay electricity, gas, water, again, that's one of your figures. If you have a gym subscription, that again is one of your figures. And those are the fixed ones. Those are the ones that you've committed. So when you've got your standing order and you've got your direct debits, they will automatically come out of your account. So you need to make sure you know that number so you've got enough money to cover it. The next is the variable expenses, so the expenses that can change. Now, those are things like lunch, coffee, going out, all of that. They can, and the good thing about those is when you're a bit tight on money that month, you can actually reduce your variables quite dramatically and not have either. You can reduce it to a smaller amount or you can get rid of it altogether. So that is that. And then the third number, and this is for all you first-time buyers out there or hoping to buy next year or the year after, is your deposit figure. Now, you first have to work out how much you can borrow, and then from that you can work out, because you've now got the first two numbers, how much realistically can you put aside every month, and that should be your deposit figure. So bear in mind those